The FBM KLCI closed below the crucial 1,600-point support level today, ending the day 22.17 points or 1.37% lower at 1,592.88 points. This is the lowest the benchmark index has gone since September 2015, almost 4 years ago. The KLCI's performance was in line with most other Asian markets, led by Hong Kong's Hang Seng Index, which closed at 25,281.30 points, its lowest level since January 4. Over the past month, Hong Kong has been gripped by escalating anti-government protests. Back at home, volumes were thin, with 2.19 billion shares changing hands as losers outpaced gainers 744 to 173. Among KLCI's component stocks, top losers included Public Bank, which settled 78 sen or 3.62% lower at 20 ringgit and 74 sen, and Genting Malaysia, which dropped by 10 sen or 3.11% to close at 3 ringgit and 12 sen. Regionally, Japan's Nikkei was down 1.11%, while the Shanghai Composite Index ended 0.63% lower. Asian markets in general had turned jittery following the increasing violence in Hong Kong, renewed concerns over the US-China trade war, and the performance of China's yuan. It was another red day for Genting and Genting Malaysia after both counters fell on the news that Empire Resorts could file for voluntary bankruptcy or Chapter 11. Genting closed 2.3% or 14 sen lower at 6 ringgit and 5 sen, while Genting Malaysia shed 10 sen or 3.1% to end at 3 ringgit and 12 sen. To recap, Genting Malaysia is set to take a 46% stake in Empire from controlling shareholder Tan Sri Lim Kok Teh for $128 million or 538 million ringgit. Empire's loss-making status had already made investors nervous, resulting in Genting losing 1.8 billion ringgit in market cap and Genting Malaysia losing 2.6 billion ringgit in market value last week when the deal was announced. Then last Friday, Empire highlighted to shareholders that filing for Chapter 11 was an option when it announced its second quarter financials to the US Securities and Exchange Commission. In order to keep going, Empire said that it is in dire need of fresh capital through a cash call or a restructuring of its massive $400 million debt. Sime Darby's unit, Sime Darby New Zealand Holdings, has inked a conditional sale and purchase agreement with Go Holdings to acquire Go Group. Sime Darby is paying 211 million New Zealand dollars or 572 million ringgit for the entire stake. The Kiwi-based company holds the Caterpillar dealership with service territory in New Zealand as well as interest in the transport and materials handling business in New Zealand and Australia. The New Zealand Caterpillar dealership is one of the oldest for Caterpillar equipment outside of the US. Meanwhile, Go Group's transport and materials handling businesses span across the construction, infrastructure, transport and power industries. In a statement, Sime Darby Group CEO Datuk Jeffrey Salim Davidson says, Go Group's transport and material handling portfolio will complement Sime Darby Motors' commercial truck business in New Zealand. This will help to boost growth in after-sales operations and franchises, which then strengthens its position in Australasia. The deal will be fully funded by bank borrowings and is due to be completed by September 30th. Petronas Chemicals Group saw a 22.3% drop in bottom line for the second quarter of FY19 to 1.12 billion ringgit from 1.44 billion ringgit as revenue came in lower and tax expense came in higher. Revenue was down 8.4% to 4.34 billion ringgit from 4.73 billion ringgit previously as product prices declined. However, this was partially offset by higher sales volume and weakening of the ringgit versus the USD. Petchem is paying an interim dividend of 11 cents per share. For the first half of FY19, net profit fell from 2.58 billion ringgit a year ago to 1.92 billion ringgit, while top line came in lower at 8.47 billion ringgit versus 9.68 billion ringgit. Looking ahead, Petchem said it expects operations to be primarily influenced by global economic conditions, forex, utilization of its production facilities, as well as petrochem products prices, which are heavily influenced by crude oil price. Meanwhile, the utilization of its facilities will depend on plant maintenance, feedstock availability, and utility supply. Efforts to track down 1MDB fugitives Law Teck Joe and Nick Faisal Arif Kamel have yielded no result, the High Court learned today. It has now been more than a year since Interpol issued its red notice to arrest the duo. MACC Senior Assistant Commissioner Rosli Hussain told the High Court that the red notice was issued in several countries where the fugitives were suspected to be hiding out, including in Hong Kong, Macau, Thailand, Indonesia, Myanmar and China. Rosli said that the Hong Kong authorities were informed of the cancellation of Jolo's passport, enabling local authorities to arrest him on illegal entry through customs. Jolo's passport was cancelled on June 14, 2018, while Nick Faisal's passport was cancelled on July 25, 2018. Jolo left the country in May 2015, while Nick Faisal left 2 days shy of GE14. Both have not returned to Malaysia since, and the red notice is still in force.